Hello everybody, I hope you're all having a great summer and that you're getting to spend some quality time outside enjoying this beautiful weather while glued to your phones and watching this update. Now, unfortunately, summer got off to a very unpleasant and very wet start for a number of people here in Ottawa. We were hit with a record-setting flash storm here on Canada Day, July 1st, and that storm caused some pretty severe flooding throughout various parts of the city, impacting thousands of homes. And to make matters worse, many of the homeowners whose properties flooded were shocked to discover, in the worst possible way, that their home insurance policies provide them with little to no coverage for that type of thing. All right? So, as you can imagine, we're now fielding a lot of questions from our clients. People want to know how to protect themselves against this sort of thing, what to look for in their insurance policies, and just how to make sure that they are adequately covered. And because we are of the people here, we're going to tell you. And of course, as always, we're also going to tell you how Ottawa's freehold and condo markets fared last month. So strap in, because we've got all of that and more coming your way in this August 2026 Ottawa Real Estate Market update. Ollie, Emma, give me a big let's go on three. Big energy. 1, 2, 3.
Let's go!
Oh, that was pretty good. All right, that was pretty good. I'll let you guys in like on a little secret. This is like our third or fourth take on the intro. That was by far their best one. The other ones, not so good. Ollie and Emma, usually very even keeled, but they rose to the occasion there. All right, so here we go. We're gonna tackle all of the fallout from the great flood of 2026 in the second half of the video. But for now, as always, we're gonna kick things off by digging into Ottawa's freehold and condo sales stats for the previous month, which of course would be July of 2026. And as always, we are going to start with freehold. All right, without further ado, let's get those July 2026 freehold sales stats up on the screen for you in 1, 2, 3. Pow. Wow, low-key bussin'. No? All right. Emma didn't like that one. All right. Anyways, she says it's gross. All right. I still have to work on my slang. Anyway, in July, we sold a total of 839 freehold homes in Ottawa. That may have been low-key bussin' or not, I don't know. But it was predictably well below the 1,110 sales we saw here in June, the month that comes before July. Now, as always, we expect to see a drop off in sales from June to July, whatever, because that period marks our real estate market's transition from spring, our busiest season, to summer. That said, contrary to what some may tell you, sales activity is generally still very good here in the summer. It's just not quite on the same level as spring. And to that point, this year's July sales total of 839 was essentially on par with last year's July total of 846, right? So no significant change there year over year. And in the grand scheme of things, right, in a normal July, we expect to see our freehold sales total fall somewhere between like the low 700s and the mid 900s, right? So this year's total is really just business as usual. And it was more of the same when it came to the average sale price for freehold homes here in July. That figure came in at about $786K. In spite of being a very healthy figure, July's average sale price of $786K was a big drop from June's average of about $831,000. That said, let me remind you that June's average sale price was literally the 6th highest monthly average we've ever had in Ottawa, right, for any month. And it was the single highest average outside of the first 5 months of 2022, which was our market's all-time peak, right? So in the same way we expect to see sales volume drop from June to July, it's also fairly typical to see the average sale price come down a little over that same period. In July, we'll see far less like prime new supply come to market. So a lot of the available stock at this time of year is made up of leftovers from the spring, but it's like the good leftovers, right? These are not like your November, December leftovers, right? Those are like the tuna casserole that's been sitting in a Tupperware container at the bottom of your freezer drawer for 3 months, right? Whereas like July leftovers, those are like day old pizza or Chinese food, right? It still slaps. Emma? Slaps? Yeah. All right, we got approval from Emma. So this is a time of year where the competition starts to get a little weaker, seller expectations start to get a little more realistic, and as a result, a lot of the homes that were consistently coming in second and third place with buyers in May and June now start to get moved, right? Make sense? Cool, let's keep it moving and look at our 3 indicator stats for the month, right? So in July, we saw our freehold inventory climb from 2.91 months all the way up to 3.45 months. All right, now, your usual reminder here that inventory is a stat that looks at the relationship between supply and demand, and Ollie, when I say that we have 3.45 months of inventory, what does that mean in practical terms? Tell the people.
It would take 3 months to sell everything on the current market.
Yeah, nailed it. Good job. All right. So, like Ollie said, 3.45 months of inventory means that based on the market's recent pace, it would take us about 3.45 months to sell all of our current active listings. Ollie's going to get his real estate license soon enough. Now, 2 more quick notes about our inventory. First, it's not unusual to see inventory levels climb as we move from spring to summer. Second, 3.45 months of inventory on the whole is a pretty healthy level. I personally consider 4 to 5 months of inventory to be balanced. So even if we round up, 3.45 months still falls just outside of that balanced range and into what I would classify as a weak or even like a whimpering seller's market. Now, our sales to new listings ratio for July, on the other hand, came in at about 52%, and that does indicate a very well-balanced market. And then finally, the average time it took to sell a freehold property here in July was 38 days, which also falls into the range we'd expect for that stat in a balanced market. So, big picture, how do we characterize our freehold market right now? On the whole, I'd say it's a mostly balanced market. We're still seeing multiple offers and at times like eye-popping sale prices on good properties in highly desirable neighborhoods, whereas a lot of other stuff on the other end of the spectrum just sits even if it's priced really well, right? So it's not a perfect balanced market by any means right now. This is the type of market where you should absolutely still expect to have to compete and pay a premium for great properties in hot neighborhoods, but it's also the type of market where you can find really good deals as you move towards the opposite end of the spectrum, all right? Ladies and gentlemen, that'll close out the freehold portion of this month's update. Now, let's quickly chat about condos before we get into all things flood and flood insurance related. So let's go ahead and put those July condo sales stats up on the screen for the lovely people. 1, 2, 3. Condo stats for all to see. All right, Ollie, you do one. 1, 2, 3. Oh, God, wah. It's supposed to rhyme. 1, 2, 3. Condo stats for all to see. Do you understand what the format is here? Let's try again. 1, 2, 3.
Condo stats for all to see.
That's what I said. You have to make. Okay, Emma. 1, 2. All right. These. It is so hard to find good help. I swear to God. It's a simple rhyme. A 7-year-old could have done it. Okay. 1, 2, 3. I'm here with my friend Ollie. Yeah, there you go. Just top of my head. Didn't write that. It's not on the teleprompter, nothing. Just came up with it. Do better. All right. So Ollie and Emma, they're going to work on their rhyming, nursery rhyming skills, whatever that's called, for next month. But for now, condos. All right. So in July, we sold 283 of them in Ottawa. That was like a hair below the 288 we sold in June. And it was also about 4% below last year's July total of 295 sales, right? So that said, in a typical July here, we'd expect our condo sales total to fall somewhere between like the low 200s and the low 300s, right? And then of course, 283 falls right around the midpoint of that range. So congratulations, July of 2026, for managing to suck less than most other months this year when it comes to condo sales volume. Yeah, you did it. You were average. Now, condo prices were kind of a different story, but also kind of not. right? The average condo price for the month came in at $424K. And if you pay attention to these updates, you already know what I'm about to say because I've been saying it for many months now, right? And that, of course, is that this stat, the average sale price for all condos across the city, has basically been flat for over 4 years now, right? And what that's meant is that for almost every single month over that 4+ year span, the average sale price for condos here has landed somewhere between about $410,000 and $455,000. So we are once again in that familiar range this month, but we've spent the bulk of 2026 in the bottom half of that range, right? Including 1 month, January, where we literally fell completely below the range. And that's the only time that that's happened in the last 4+ years. So in a big picture sense, we're still definitely feeling some downward pressure on condo prices here, especially when it comes to your sort of typical young professional 1 and 2 bedroom units in the extended downtown core. Right? Prices on those units in particular continue to take a beating in the vast majority of cases. Now, when it comes to our July indicator stats for condos, it's more of the same. The stats for the entire condo market were kind of middling, but when you isolate for apartment style condos in the extended downtown core, so like basically from Vanier to Westboro, the stats get a lot bleaker. Allow me to illustrate. So we ended July with about 4.62 months of condo inventory for the entire city, right? That does fall within balanced market range, albeit at the higher end of the range. But when it comes to apartment style condos in the extended downtown area, we're currently sitting on 7.36 months of inventory. That is well within buyer market territory. And then our sales to new listings ratio for condos in July was about 44.7. Again, that stat falls into balanced market range. But again, if we focus our attention on apartments in the extended downtown core, our July sales to new listings ratio drops to a measly 30%, which again is well within buyer market territory. Anything below 40% there is buyer market. And then finally, the average time it took to sell a condo in July was 48 days. That's for the entire city. And then once again, if we isolate for downtown apartments, it jumps slightly this time to 52 days, right? So that's actually still within the high end of balanced market range for that particular stat. So hey, not terrible. You did okay on 1 out of 3 condos. So obviously, when it comes to our condo market, there's a fair bit of variance across segments at the moment. For downtown apartments, it's still very much a buyer's market, right? Whereas other segments are more likely to fall within like balanced market territory. That said, I do want to leave you with one more thought on those downtown apartment condos before we jump to the next section of the update. Look, I've mentioned this before, but in recent years, a number of large Ottawa developers have shifted their focus from building condo towers to building what they call luxury apartment buildings. And this is especially prevalent in the downtown core. These luxury apartment buildings offer nice amenities and well-appointed units, 5 appliances, nicer finishes, the whole thing, right? So basically, they're providing all of the benefits of condo living in a rental building, right? And for a while, the monthly rental cost for a unit in one of these newer luxury apartment buildings was anywhere between 30 and 50% lower than the monthly cost of owning a comparable condo in the same neighborhood. That said, as condo prices have continued to trend down and as rental prices continue to rise, because remember, these new buildings are not subject to rent control, meaning the landlord can raise rent as much as they want every year, the math on condo ownership is slowly starting to make sense again. The gap between the monthly cost of owning a condo versus renting a comparable apartment has shrunk considerably to the point where in some areas, we're barely seeing a gap at all anymore, all right? In some pockets of the city, condo prices are literally back down to the same levels they were in 2014, 2015. So like 10, 11 years. That being said, I personally do not think we're going to see investors re-enter the condo market in a significant way anytime soon, and they did make up a large proportion of buyers back in those earlier days. But for people who actually want to live in one of these central pockets where you can now buy a condo with 5 to 10% down and have your monthly costs come in around the same as renting, it might be worth exploring what your purchase options look like. Because the long-term benefits of owning are still there, right? You're still building equity, and you're also getting more cost certainty around your monthly housing costs long-term than you would renting in one of these newer buildings with no rent control. And last note here, don't pretend to know the future, but if things keep trending in the same direction, condos purchased today in a few years could very well end up renting for more than what they now cost to own, right? Which would give today's buyers some added future flexibility when they get to a point in their lives where they're ready to move on from the condo. All right, so all in all, we may be seeing a teeny little bit of light at the end of the tunnel here. Time will tell, right? Okay, whew. So that'll do it for condos this month. And if you thought that segment was bleak, just wait, because we're about to dive right into the great Canada Day flood of 2026. So let's do it. Here we go. So if you live in Ottawa, you probably already know all this, okay? But for anyone who doesn't, allow me to very quickly give you just a little bit of background here, right? So on Canada Day of this year, that would be July 1st, 2026, Ottawa was hit with a record-setting flash storm, right? And some of the hardest hit areas were in the central and western parts of the city. During that flash storm, over the course of just like 4 or 5 hours, some of these neighborhoods received anywhere from 100 millimeters to 167 millimeters of rain. Now, to put that into context, a typical summer storm at this time of year would yield 5 to 15 millimeters of rain. This was 10 to 20 times that, all right? This was like the Grant Cardone of storms. It wasn't even a once in a century event. This was literally a 1 in 200 year storm. And as you can imagine, receiving that much water in so little time was enough to completely overwhelm a number of the city's stormwater management systems. And so the result was widespread flooding across several neighborhoods, right? Sections of Nepean in particular were hit extremely hard, largely because much of the older infrastructure in those areas was just not designed to handle that volume of water. Now, as of July 31st, the City of Ottawa has received over 7,100 reports of flooded homes connected to the Canada Day storm, right? And many estimate that the true number of affected homes could easily exceed 10,000. And to make matters worse, we are now hearing story after story after story from homeowners who are finding out how little protection their home insurance policies actually provide. In many cases, these homeowners are being told their coverage comes nowhere near what it will cost to fully repair the damage to their homes, and then in others, they're being denied coverage altogether. Long story short, it's a mess, all right? And then naturally, we're getting a lot of questions from our clients about this, and the questions we're getting all kind of sound something like, insurance, what the f***, right? Like, what is even the point? Right? And if there is a point, what do I need to look for to make sure that this shit doesn't happen to me? Right? And so we are going to do our best to answer those questions for you now. And look, we don't pretend to have all of the answers, right? But over the course of the next few minutes, we should at least be able to give you a few useful nuggets of information. At least that's the goal. And then if we don't, hey, you can always head on over to the comments section and call me an idiot. All right? Deal? Deal. Everybody wins. All right. So with that, let's dive in. So first and foremost, a lot of people are very confused as to how an insurance company can deny coverage to someone whose home has flooded, and of natural causes at that, right? They are asking, and rightfully so, like, hey, isn't flooding like one of the main things a home insurance policy is supposed to protect against, right? And in reality, the answer is, well, kinda. You see, most insurance companies consider that there are different types of flooding, right? And many policies protect against some types, but not others. So in a nutshell, Most basic home insurance policies will protect you against a sewage backup and against the type of flooding that originates from inside your home. So like a leaky toilet, a leaky shower, a failed sump pump, etc. Many policies, however, fall short when it comes to coverage against what they deem to be groundwater infiltration and or overland flooding, all right? So groundwater infiltration is when water saturates the soil around your home and eventually comes through your foundation's walls and or floor. Whereas overland flooding is exactly what it sounds like. It's when water above the surface pools against the house and then finds its way in, usually through an opening like a basement window, a window well, a door, a vent, etc. And again, a lot of insurers will just straight up exclude groundwater infiltration and overland flooding from their coverage. That said, to be fair, some policies do cover one or both, and then there are others that will allow you to purchase additional coverage at an extra cost, of course, if you want that protection. Cool? All right. Now, the other lesson many of these homeowners are unfortunately learning the hard way is that insurance policies will often cap how much they pay out for water damage. And in many cases, the maximum payout ends up being well below what it would actually cost to repair the damage caused by said flood. You see, these types of coverage limits are not typically adjusted for inflation, right? So if you're somebody who bought your insurance policy 10 to 15 years ago, that $25,000 maximum, for example, may have seemed like more than enough to redo your dream basement back then. But today, rebuilding that same basement could easily cost 2 to 3 times that much, if not more. So, if you are watching this and you own a home, by now, you're probably thinking, shit, I should really check my home insurance policy, all right? And you're damn right, you absolutely should, because I am willing to bet you didn't read that policy all that closely when you first signed it, right? And you're definitely not reading your renewals every year. In fact, there's probably I would bet there's something like 99% of the homeowners out there who couldn't tell you a damn thing about their home insurance. They have no idea what their coverage limits are. They don't know what is or isn't covered. Hell, most of them probably couldn't even tell you who their insurer is, right? And hey, look, I know I'm being a little preachy here, all right? But before you get all offended, let me just say that this condescending prick right here, same boat, all right? So we all need to do a little better. And with that, here are a few lessons, tips, and pointers for all of us, right? Including me. First and foremost, and I cannot stress this enough, when you are getting an insurance policy, especially a home insurance policy, your biggest asset, use a broker. Yes, I know that your bank or your mortgage lender probably also offers home insurance. And yes, I know there's also a bunch of websites, right, where you can just fill out a quick questionnaire and have a policy within minutes. And look, I appreciate convenience as much as the next guy, right? But when you reduce the buying process to a series of checkboxes, you are far more likely to wind up with a policy that won't provide the right coverage when you actually need it, right? And even if you're very, very smart, right, which I'm sure you are, after all, you're watching this video, right? You probably spent less than 5 hours of your entire life thinking about insurance. A good insurance broker, on the other hand, deals with this stuff all day, every day. So you want someone like that working for you, making sure you understand what you're buying and that you're actually getting the coverage you need. Second pro tip, all right, when buying insurance, this is gonna shock you, read your policy, all right? Better yet, have your broker walk you through it line by line. And then don't commit to anything until you understand exactly what's covered, what's not covered, what the limits are, and that you feel comfortable with the coverage you're getting, right? It's simple, but it's important. And again, it's something that a lot of people just kind of gloss over. Third piece of advice, this is the one that people miss the most often, even when they followed the first two. Update your insurance policy as you update your home, right? If you finish your basement, you add an in-ground pool to your backyard, you renovate your kitchen and bathrooms, etc., make sure your insurance policy is updated to reflect those improvements. Otherwise, you run the risk of finding out your coverage falls short when something actually happens, right? And in that same vein, I personally think everyone should review their policy at least once a year to make sure it still fits their home and their needs. And again, a good insurance broker can walk you through all that and help you identify anything that may need to be updated year over year. All right, I got one more for you before we wrap. And this one doesn't just apply to insurance, it also applies to realtors, contractors, and pretty much everything else in life. You probably know where I'm going with this. But when you choose the cheapest option, more often than not, you get exactly what you paid for. All right? If you were to ask someone who's worked with the Papineau Group to buy, sell, or invest in Ottawa real estate, they'll probably tell you they got a whole lot more than they bargained for. And that's because we pride ourselves on providing an exceptional service with unbeatable results for all of our clients. So if you're thinking of making a move in the future, or hey, if you just have questions that you think we can help answer, we'd love to hear from you. You can contact me directly using the information below, right there. And you can also use the Calendly link in this video's description to access my calendar and book a discovery call with me at a time that works for you. I can all but ensure, see what I did there, that it'll be a productive conversation. All right, and with that, I'm out for this month. Thank you for watching, everybody. I'm Serge Papineau from the Papineau Group in Ottawa. I appreciate you, and I'll see you next month.